Do you want to get rich without any work? Then you must invest the money you have. Sir Warren Buffett and many other millionaires got rich from investing only. But you must do this in a correct way, and for this, we will be giving you the 10 tips that will make you rich from investing. Watch the video till the end as all the tips are important for you to know. Now let's start. 1. Start immediately considering the possibility of making financial investments. If you want to be sure that you get the most out of the potential profits you make, you shouldn't put off beginning your journey as an investor since you run the risk of missing out on any advantageous developments. It's possible that in order to get the most of your financial journey, you'll need to give in to the demands of fear of missing out, FOMO. It is important to get started investing as soon as you can if you want your money to grow as rapidly as possible. 2. Put in as little or as much as you want. The amount is up to you. It's a common misconception that people in their middle age who wear gray suits are the only people who work in the investing industry. Despite the fact that this could have been the case in the past, circumstances have changed, and investing is now open to anybody who has even a little amount of capital to invest. Consider the following scenario as an illustration of how even a little amount of money can pile up over time. If you invested $30 per month for 25 years using an online investing platform like Wealthify, at the end of those 25 years you would have around $18,529.10 in your investment account. 3. You should make a strategy for how your money will be spent. If you are just starting out in the world of finance, you should give some consideration as to the different sorts of assets that you would want to include in your portfolio. How would you want the investments in your portfolio to be organized? The result will be heavily influenced by the attitude that you take on danger. If you want to know more tricks to earn money and get rich, then do subscribe our channel and also press the like button. 4. Take a gander at individual retirement accounts. With the help of a stocks and shares ISA, often referred to as an investment services account, you won't have to be concerned about having to pay taxes in the UK on any earnings you make from investing in the stock market. You have until midnight on April 5th to use your annual ISA maximum of up to £20,000 in a stocks and shares ISA. This amount is subject to change. Considering that presents from the government are not very common, you should probably give some consideration to spending yours before the deadline. 5. Do the right thing. There is a wide variety of opportunities for ethically responsible investment. You have the option of doing it on your own and choosing investments that are sustainable, or you may construct an ethical strategy that is managed by specialists. Those in charge of these accounts make it a point to ensure that their money is placed in companies that either have high ethical standards or are actively seeking to improve the policies and processes that they use in their business. In addition, the holdings of the fund are continually assessed to ensure that any company that does not meet the necessary criteria is removed from the fund's holdings. 6. Keep a level head during periods of market volatility. Investors should brace themselves for a possibly bumpy trip in the financial markets since they, like roller coasters, experience both highs and lows. When the market falls, it's natural to feel nervous, but being calm and collected during the storm is critical to your success. When you sell your assets, you will be forced to confront the fact that you have lost money. If you are able to maintain your composure and resist the urge to sell, any losses you suffer will stay simply theoretical, a number on your dashboard. If the markets rebound, you may actually see a rise in the value of your assets and end up making a profit. If you are able to do this, any losses you sustain will remain purely speculative. 7. Consider dividing your money into different investments. It is always a good idea to prepare for the worst-case scenario, no matter how you plan to invest your money. Your risk of financial ruin might be mitigated by dispersing your capital among a variety of investment vehicles and geographic locales. You should keep in mind that putting all of your eggs in one basket might result in a harsh awakening if either one of your investments is unsuccessful. If you diversify your holdings over a range of asset types and financial markets, such as stocks, bonds, and real estate, you may reduce the likelihood of losing all you have invested. 8. Always think about what is ahead. The vast majority of us despise having to wait, that much is a given. In today's fast-paced culture, when services such as on-demand television and next-day delivery are the norm, patience is a quality that is becoming more rare. Patience and an eye on the big picture are two traits you'll need to cultivate if you want to be successful in the world of investing and earn the most money possible. Take into consideration the fact that between 1986 and 2022, the FTSE 100 has an 88% likelihood of providing a positive return on investment over any given time period of 10 years. 9. If you think you need help, don't hesitate to ask for it. It's possible that the idea of investing seems daunting, but it doesn't have to be. Investing can now be done by anybody with a computer and access to the internet thanks to the proliferation of online investment platforms like SoFi. When you start a plan with financial advisor, all you need to do is tell the advisor what sort of plan you want, how much money you want to invest, and what kind of risk you're okay with. They'll take care of the rest, from picking assets to making course adjustments when they become required. Getting started with investing has never been easier than it is now. 10. Give some thought to the retirement plans you may pursue. Planning for one's retirement may begin at any point in one's career, and it is never too soon or too late to do so. It is never too early to get your financial house in order so that you may retire on your own terms, and even if saving for retirement isn't high on your list of priorities while you're in your 20s, it's never too early to start getting your finances in order. It's never too early to start planning for retirement, but if you're in your 30s or 40s, now can be a good time to take stock of your state pension and work pension funds. The next thing you need to do is give some serious consideration to issues such as whether or not you will have enough money to retire when you want to. If that's not the case, do you believe there's any way to beef up your funds for retirement? Now, that's all for this video. You got to know all the tips that will make you rich if you invest your money. Money is the ultimate thing, and investing will make it more powerful over time. You must invest your money and adopt better money habits to get rich in life. Sir Warren Buffett, Jeff Bezos, Mark Zuckerberg, and many other millionaires and multi-millionaires have already invested their money. Share this video with all of your friends. Do subscribe to our channel if you want to know more amazing financial tricks. Press the like button also. Comment below if you are left with any queries or suggestions. Thank you all for watching till here.